I'd like to show you my current setup that I'm using to trade. I know there's a lot of videos with a lot of concepts and ideas, and I'm just sharing those with you. This is my current setup at the moment, and I do change. Sometimes I do put the Karma on here and the VWAP and other things, but this is my base setup. On the left hand side I have a 15-minute chart of crude oil, and on the right hand side I have a 5-minute chart of crude oil. What I do is I look for setups on the 15-minute chart. So when I think there's a setup, I think, oh, okay. For instance, I might think, right, well, this might be turning over to go short. So what I'll do is I'll then use the 5-minute chart to take my entries. Okay, and that's really it. The reason I do it this way is I like the stability of the 15-minute chart, but in saying that, you still get wiped out on the 15-minute chart. But for entries, I might just get that, 5 cent earlier entry, or maybe an exit or something. So that's how I use it. Also, I could trade these independently. So sometimes I might see the 15 minutes setting up. Okay, just for instance here, this is crude oil from last night. See here on the 15-minute chart, see how price started to push back up towards the end of the session, but it never quite got above this moving average, and I'll talk about the moving averages in a second. It never quite got above this moving average, where, on the 5-minute chart, you can see clearly there was quite a nice move to the upside here and then here. Okay, so you just have to use your discretion and your experience to be able to read both of these charts, because they are both independent time charts, although they are tied in because they're all moving price, but they're still independent time charts. So like, for instance, I could have sat this out and eventually entered here on the 15-minute chart, which would have been here on the 5-minute chart, which probably wouldn't be ideal. I would have been looking at the chart here going, well, hang on, this is pulling back. Is it a pullback to go lower? So I was watching this chart last night. I saw it pull back, and it only went to here. And you can see the CCI, it came up, pulled back, and it dropped off here. And you can see the 5-minute chart. So the entry for me was there. So 32 cents versus 17. So that's how I use both of these charts. I use them together and separately. Let's just talk about the indicators. I use a moving average ribbon, which holds 4 different EMAs or SMAs or other variations. I use the purple is a 20 EMA, and the black is an 8 EMA. Okay, sometimes I might fluctuate to a 34 EMA just to get a longer view. Forget the 200. I might actually put this to a 50, and then I might just quickly turn it on and see what the 50 is doing. That's how I use these things. Okay, so on both charts, what did I do? Just turn that off. On both charts there's a 20 EMA and an 8 EMA. Okay. Down below is a CCI on both charts. Let me just turn this on so you can see. Commodity Channel Index, this is set at 20, okay, and the actual channel itself is set at plus 100 and minus 100 on both charts. Okay, there's the settings. There's also another setting that I do use, and that is I turn on the moving average. The moving average is based on the CCI, and I have that set at 25. Okay. Why do I have it set at 25? There's a reason. I like its smoothness, and it gives me an early warning sometimes that a change may be happening. Okay. It's not always correct, but at least it's just giving me an early warning of like, oh, okay, if this CCI is crossed through the moving average, well, obviously there's something that is happening, okay, on both charts. I'll turn it on. Sometimes I have it turned on, sometimes I have it turned off. Also, having this set up with this moving average, it now behaves also like a MACD. So I have one indicator that does two. It does the CCI and the MACD, and I'll show you. And I believe that it's faster than the MACD. Not always, but a lot of times. Oh, I've got the wrong one. Oh, it doesn't matter, we'll go here. So, crude oil from last night. You can see the CCI line, which is blue. See when it crosses through the moving average, it's 1 bar quicker than the MACD. Okay, and you can see here when it crosses, it's 1 bar quicker. In this case, it's 5 minutes quicker. They both behave exactly the same. See here, about the same there. 1 bar quicker here, about the same there. There, you know, consolidation, 1 bar quicker there, 2 bars quicker there, 10 minutes earlier. And what I like about this combination of the CCI versus the MACD is there's levels on the CCI. I can see these levels because of the channel. With the MACD, I've got no idea where I'm at. It's just, there's the line and there's the histogram. It just doesn't tell me anything. Whereas I can see on the CCI, I can go, okay, well, there's the zero line. You know, the zero line is representing the 20 EMA, okay? Or the 20 EMA is representing the zero line. And there's the plus 100 and there's the minus 100. So I know that when it goes to minus 100, it's it could be a good sell. Where this on the MACD, it's like, well, I don't know. It's above the zero. I have no idea. The MACD is good, but it's at the same time, it's I don't know. It's not very usable for me. I've mentioned before, I have a love-hate relationship with this thing. I'll just show you on the 15-minute chart how. But I haven't got a. Let me just get one of these up. So if you do like the MACD, you don't need to have it if you have the CCI set up as this. You can see here, as you can see here, where it's crossed over. That was 15 minutes early. It's 1 bar early. You know, that's huge. You know, that's 12 cents. It's crossed over here, 1 bar early. Crossed over here, 1 bar early. 1 bar early. Wow. 1, 2. It's like half an hour early on the CCI. You know, that's substantial. And that's the end of the night. So that's why I don't use the MACD. This is why I have the CCI set up. There's just so many ways to use this. On the 15-minute chart, I use the CCI. Whenever CCI is crossing through something, it's a signal to me. So if it's crossing through the zero, it means price is crossing through the 20 EMA, thereabouts. If it's crossing through the plus 100, it means, you know, there's more inertia going upwards potentially. And then you can see here where it goes right up and it turns over. Well, I would be looking at that going, well, let's take a short. And then you can see it comes down here. It goes through the zero. You can see prices going through. It didn't bounce off the minus zero. It turned up. That could be a long again, you know, because it's breaking back through there. It broke through the EMA of the CCI. It doesn't always work, so please, you know, don't think, oh great, this is the holy grail. You also need to be looking at price, the asset that you're trading, crude oil for me, the time of the session where and what is happening, you know. But over a period of time, I'm getting so much better at analysing just this one indicator. So I only use 3 indicators. I have the 8 EMA, the 20, and the CCI. My EMAs do change sometimes. The 8 just helps me visualize the line, and of course that's the quicker of the moving averages. You can see it doesn't mimic the CCI, but it sort of does in a way. I could make that really short, But the problem is you then get these, I'll just try and make that a 5. No, you wouldn't want to go any shorter than a 3. So, there's a 3, and it's sort of, it's not really mimicking the CCI line here. I mean, the CCI line is price, okay? That's what that is. If you could find an indicator that can do that, well, to follow price, but why would you need to do that? You've already got price as an indicator. I just use this to smooth out the data, just so I can see it. I'm not waiting for the crossover of the 8, otherwise I'd be entering way up here. I'm looking, so like for here it's come down, I can see price as turning over. You can see it here. This is what the CCI is measuring. You can see it pushing upwards. The CCI just helps you with the visualization of this. Do you know another really good way to trade is to do this? It's going to take a while. I'll just do it just quickly. Is turn all your bars a color, just like one color. This is a really good way to trade, so you're not biased with big red bars or whatever. Okay, so now we just have bars. What a fabulous way to, you don't know what's up or what's down really. So this is a good way to trade. It keeps you unbiased, and now you're just focusing on price. Okay, I do this a lot when I'm uncertain. So like, there was an uncertainty here, and it's like, well, is the market going up or is it going down? Well, I can tell you straight away, based on this moving average and also the CCI here, that it was still staying down. So you would have entered right up here for a short. As soon as it got right up there, just take it and enter it, bang. And using these bars without their colours can really help. It takes practice because if you're so used to the normal bars, let me just get this back so I don't muck it up. Let me just change it, and then I can just go apply to all, bang. So you can see there's a big psychological difference. To me there is. It's like, oh, there's a red bar, I'm going to die. Oh, there's a green bar, I'm going to be rich. Oh, I'm going to die. So taking the colours out of the bars sometimes can really help. Anyway, I just wanted to show you my setup and how I use the thing. A 15 and a 5 minute. You could go any 2 combos of charts you wanted to, or you can just trade a 15. Whatever you want it to do, it doesn't matter. At the end of the day, so long as you're in front and you have a few losses, that's the name of the game. Catch you later.